gold, which has achieved 1808, the magical number which we were following since long from 1680 levels. I told you 1808 you should watch out for. It has never looked back this week. It has never tried to rise again this week and perfectly traded with a drop. I told you below 1790 you can expect it to drop for 1770, 1750 levels. This is going to be a very good support. Precisely, it has dropped till towards those levels and it still has the next support at 1740. Now what is going to happen next week? Which position you should take? We will see with the help of candlestick charts and indicators. And if you are not subscribing this channel, definitely you are missing on the profits, as I share my daily analysis on gold, one with the Asia session, second with the US cash session. So twice a day I share my update. Definitely it will help you in your day trading decisions. Do not commit this mistake by not subscribing. So do subscribe, share and comment. Now look at this. This is on the daily charts, and on the daily charts you can find out, if you look at the near term channels and near term highs, see perfectly achieving the highs from this. This is the channel in which it is trying to trade, and the lows are quite far. So if you consider that it fails to break past 1800 anytime again, then one can expect that we may, or gold may, look forward to this zone at 1660. If not this week, next week, in some time in near future we may see it hitting those levels. So this is one observation, that it is trying to trade in this bearish channel, which you should be watchful of, cautious of. Now this is a long term channel, and this should be considered. This is a perfect retracement level which it has achieved. Now look at this. At the same time, if it bounces back from here, because we have seen a reversal, we have seen it taking support from 1700 and 1680, and it is trying to rise from there. If you consider that this is going to remain bullish and it fails to break past 1740, so we have to look forward to 1740. If it trades below 1740 next week, you can expect we may be looking at 1720 levels, and then in fact it can drop till towards 1710 and 1700 again. So next week you have to be watchful of 1740 levels. If it trades below 1740, that will be suggestive of that it may break heavily. In fact, in the very first couple of days we may see it breaking strongly. And at the same time, one must not forget, these are the last 3 candles, these are the last 4 candles, and these are this week's candle. So see, yes, you can go long at 1760. See, we have to consider both sides movement. If you have to trade profitably, you have to eliminate your bias and trade with the direction. Let's say if it breaks 1760, then you can expect that 1764 the first target, and then 1771 the next target. Beyond that, we may see it hitting 1784, which is going to be a very strong resistance. The confirmation of it achieving the highs of this channel, which will be at 1820, is if it trades beyond 1784 next week. So yes, you can enjoy the long entry. Yes, you can try to take, or you can try to buy at 1760. In fact, you can initiate a buy entry very early at 1754 itself. Beyond that, you can expect it to hit 1764, 1771 and 1784. Till 1784. It can reverse again on the downside. It can drop on the downside. So you have to be very cautious with your positions till 1784. Beyond 1784, consider that as reversal, and it may rise for 1800, 1810 and 1820 levels. And on the downside below 1740, yes, you can go short. Then expect 1730, 1718, 1700 as a good support. Then 1680 and 1660 will come into picture, if not this week and then next week. If you recall, few weeks back I had made a prediction that yes, 1680 is the support. That is few months back rather, I will say 1680 is the support, and then below that gold has to see 1500 to 1600 zone. Let's see if it breaks this time and continues in this direction. So this is just on the daily charts. Let's have a look at the weekly charts now. Look at the weekly charts and what a perfect, beautiful classical candlestick it is formed, and a perfect retracement, you can say. See, it is trying to trade in this channel. And if you look at the drop, the retracement, the drop, lower low, the retracement, now trying to look back again. Also, this is kind of a Mariboju candle where you can see a flat top and a flat bottom, almost closing at the bottom, closing at the lows for the week, indicates that it may continue the little bearishness. So if it breaks below 1740 next week, yes, you can initiate a short entry, but then be aware of 1720 and 1700. If it breaks below this, there is a probability, strong probability for it to drop for 1680 and 1660, which is the lows of this channel. So we have seen 4 green candles, we can see couple or more red candles which might bring it till towards 1660 1600 levels also. So this is one observation on the weekly charts. Now let me show you the long term chart what we have seen. One thing is very clear, 1800, which was the resistance earlier or support earlier, it has seen multiple candle getting support from these levels. Now is the resistance for it to trade. On the upside, it is trying to drop. At the same time, you have to be watchful of 1680 breaking out beyond this zone. Breaking out beyond this zone will try to take it till towards 1620 1600, the next support, and this zone is very important for gold between 1500 to 1600. So this is one observation on the weekly charts. Now let's have a look at the monthly candle. Now look at the monthly candle. It has started to take the shape out there, and this is red in color. It has seen the wick out there. It has seen the wick out there. Now it is trying to form the body on the downside. Couple of things can happen. Either it may remain engulfed, as we have seen lower highs, we can see higher lows. So it can close the month somewhere here at around 1700. Very much possible, very much probable. 8 trading sessions, almost $50 of move can be seen. You can take a position. If you see it dropping below 1740, you can keep it with a stop loss at 1760. You can stay short, and then one can expect it to hit at least 1695 levels, 1698 levels. Breaking below 1680, yes, it may call for a further drop, which will take it till towards 1680, 1660 and 1640 levels. In fact, 1620, 1600 is also possible, as it has to cover a lot much of there on the downside. See, this is the first pit stop for gold here at 1600. This is almost 4 to 5 months back. Those who watch me regularly, I have told that gold has formed a double top here, and the retracement, the rally started from here, retracement, sideways move for a little while, double top, and now it is again looking forward to 1600 at least. It must come back to these levels. If not, so this week or this month, then maybe we'll see a little retracement, but it has to come back to 1600 in some point of time in near future. Now this is what we can see on the daily, weekly, monthly chart. Let's have a look at the 4-hour charts too. On the 4-hour charts, we can clearly see this is an expanding triangle here, and you can find out the support there at 1740 is strong, and the resistance at 1755 can be strong. So on the upside, definitely 1760 is a good resistance, 1770 is a good resistance, then 1780, 83 levels should come into picture. But this is just on the 4-hour charts. Now let's have a look with the help of indicators. What does the indicator suggest? See, on the indicators, it is trading at the bottom of the Bollinger Bands and the bottom of the channel out there. The resistance at 1764 is strong and 1770 is strong on the upside. You have to be very, very cautious till then. Directional movement is bearish. Stochastic is oversold. MACD is bearish here, and it is trading oversold. RSI 2 is oversold, and hence a bounce back can also be expected. Now, because see, indicators are indicating oversold, while the candles are speaking a different language where it has the probability for it to drop. Now 4-hour charts means in the short time frame, because you can say in a day you have 6 of such candles, and 6 such candles with minor bullishness taking it till towards 1770, 1780 levels is good enough for it to enter into overbought levels again and then drop from there, highly probable. Now look at the daily charts here. On the daily charts, it is trading almost at the bottom of the Bollinger Bands. At the same time, if you look at, this is also trading below the 20 and 50 period exponential, simple and weighted moving average, indicating that it is a little bit bearish. Also look at this. This is the 20 and 50 period moving average crossover, indicating that the price on the 20 period moving average is higher and 50 period moving average is lower. However, it is trading below this zone and indicates that this is going to get some serious resistance in between 1660 to 1680. I have also told that be watchful of 1760 to 1780 levels. I have already told that be watchful of 1784. Beyond that, yes, you can expect it to come back to 1800, 1810 levels, which is going to be definitely stronger resistance. 100 period, 200 period moving average sitting idle there, probably waiting for it to come back on the upside. So this is one observation on the daily charts. Look at the directional movement. This is crossed over. It was trading in green. It has come back to the red zone again. At the same time, the stochastic is oversold. If it is bearish, it can continue oversold for a little while. Now, look at the MACD. The MACD has just crossed over. I told you in my daily analysis. This is yesterday and day before. I have told you it has crossed over and it may continue to diverge. It may continue to give you red candles as it wants it to trade in red zone, because this is a crossover happening after multiple days, multiple candles, and this may sustain this, and hence there is still a probability that it can rise or it can drop a little and achieve the highs before it looks forward to converge. Because it is just two candles, it may sustain these levels, appears, and also it is divergent in indicating more bearishness ahead. RSI looking downwards here, again indicating more bearishness there. And look at the weekly charts now. On the weekly charts, you will find that the resistance there at 1840, 1830 zone is very strong on the weekly charts. I have told this several times, and also we have seen from the previous candles, we have the experience that this zone is definitely a very strong resistance zone at 1836, 1833, 1840 levels. It is failing to go past those levels, and look at the bottom of the Bollinger Bands here at 1680 levels on the weekly charts. Now look at the directional movement. It is again diverging here, indicating more bearishness in the coming week. Stochastic has seen a a drop, lower highs, higher highs, and then further higher highs. So see, and also if you consider this as pivot here, you can see it is consistently achieved highs and the lows. Now it is trying to drop further. Let's see if it does. Let's see if it crosses over. The MACD is on the sell side and it is already bearish. It is trading with very little deviation, very little you can say divergence. RSI is looking downwards, and if you look at the monthly candle, likewise on the monthly candle, see precisely from the resistance point 1810 levels, it failed to go past. This is the 20 months moving average which is failed to sustain and dropped from there precisely. Again trading, indicating bearishness there. On the downside, support at 1660 and 1640 is very strong. Then 1600 will come into picture. Directional movement was so far bullish. I think this red candle will make it crossover and take it into bearish zone. Stochastic on the monthly charts, this is oversold, and this is happening after almost couple of years. Early 21 we had seen that, then before that 2018, 2019 and 20. So this is a rare sight in recent times where gold has traded bullish, since this was the bearish zone for gold where it had traded oversold. Now it is trying to come back to oversold levels again. Look at the MACD, this is also wide divergent and bearish. And if you look at the stochastic, this is looking downwards. Considering this, now let me give you the trading levels and strategy for next week. We will see both the levels, where to go long, what is going to be the resistance, and we will also see where to go short and what could be the target levels. And before I proceed, yes, if you want to learn the same art of trading profitably, trading the right trades at the right time, at the right entries and the right exits, you can join my mentorship batch. The strategies and the methodologies taught will definitely help you become a profitable trader. This is a 15-day session, 90 minutes daily, and a lifetime support is what you get. Also, you can be part of my VIP signals group. Also request you all to support the effort and become a patron. The patron page link is mentioned in the channel and video description, and reach out to me for any of your trading or training queries. My email and telegram IDs are mentioned in the channel and video description. So first let's talk about where to go long. Yes, you can go long at 1751 levels itself. I am giving you very narrow range this time. Beyond 1751, see, you have to ensure that once it achieves one target, see it starts from here, you have to in fact immediately in $3 of move at around 1754, you have to put your stop loss at cost here. So in case of a reversal, you can safeguard your profits out there. It can reverse any point of time on the downside. So levels which I am sharing is just to ensure that you can make a little profit. The safe entries which I will tell is, see, beyond 1757 you can expect 1764. Now remember, yes, the safe entry could be here at 1764, which is still a moderately bullish or moderately safe entry, beyond which you can expect it to achieve 1771 and then 1784. Remember, this is the level you should watch out for next week. And if it breaks, sustains above 1784 any point of time next week, consider that as a bullish reversal. Else, from any point of time, it can reverse again on the downside. It can reverse again from the downside. It can reverse again on the downside. It can drop from any point of time till there. Only bullish thing I will expect that if it trades and sustains beyond 1784, then you can expect directly 1791, 1800, and beyond 1800 we can look forward to in fact 1810 and 1820 levels. Sky is the limit on the upside. However, just be cautious till 1784. It can reverse again and drop again on the downside. If you say that if I am bearish, why I am giving the levels to buy? As I said, even the smallest of the moves you should capture, because you are trading as per the levels and trading with the stop loss at cost so that you can profit. In this way, if you trade, definitely if it continues to remain bullish, it will capture you the points out there, and then beyond that definitely it is add on, so you can keep booking your profits at every point and try to re-enter. Now where to go short? Yes, as I said, go short below 1740 levels. Below 1740, expect that it is going to hit 1730, 1718. Below 1718, directly it will lend to 1700, rather I will say it is 1698 levels. And if it breaks this zone, you can expect 1680 and then 1660 levels. Beyond that 1640, but then sky is the limit. You can keep on counting the resistance level, but I am providing you all the resistance which you should watch out for throughout the end of this month for the next trading sessions. In fact, you have to be cautious of this. The candle is trying to take a shape and probably it can continue to trade bearish. So trade accordingly, trade with the levels, trade with the stop loss. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon. Thank you very much. Have a great profitable trading week ahead. Thank you.